All right, friends. So, after an extensive review of the median average trend lines, multi-time frame average trend lines, or average lines, if you want to call them that, I have decided to move on to a different strategy, but I want to discuss what happened on that multi-time frame averaging, in case you want to continue doing it yourself. So you can see that this line here was from the 1 minute. From the 1 day, average, and that was finished on March 28th. Now, I'm not saying I'm totally banning this, so I will let this run as usual, but I have something else that I want to take action on that is much more, that I think is much more accurate currently at this time. So this was, turning back to this, this ended in March 28th, and this 1 day trend projected for that day, this line, which then correlated to, or lined up to the highs of each of these weeks. 1, 2, 3, three, if the fourth week, the first and second, you can see that very clearly here, in the fourth week, but still in this, if that is the high. So these three highs right here lined up on it, and that was just a projection of 1 day, an average of 1 day. So what happened is, consecutively for the next weeks, as that was playing along, you had these pockets here, these zones that you could use as risk and reward zones, and clearly this is a very clear risk pocket here. And so how I use these is the smaller ranges act as the stop ranges, versus, or the risk range versus the reward range. So this would be a risk range not to trade. Obviously you wouldn't trade the price if it was in here, and either side would represent the stops for whatever side you were targeting. So if you found the price under here, then you would target this and use that as a stop, and if the price went above here, then you would target this and use this as the stop. This line is a stop, and that's exactly what happened. You can see that it used it as a support on the side. It did not target this side because it had its mind set on buying for the 1, 2, 3, 4 for this whole month. And so you can see that this, as a risk zone, operated as a support, and the first time it targeted, it hit that as a target, this, which was the 1 day average there, hit it as a target, and then returned to the support, used it as a support, that risk zone, and then hit it again, hit that target again, and that's where it's been floating ever since. So you can see that there is structure here. That was about 380 pips there, but if you want something that's even more precise than that, that's what I'm going to be working on now. So and that is this these trend lines that are drawn, that are more traditional types of trend lines. They are drawn from the highs, high to high or low to low. So in this type of strategy, what I'm looking for is a high to high, for example, here we've got, or a low to low. So we've got a low to here, which forms a trend line, preferably with 3 touches, but two is fine, is okay. It's also and also you can try drilling this down from the top time frames, the same as the multi-time frame, the top time frames, to the lowest. So if you prefer to trade on the lowest time frame that you prefer to trade on. I prefer to trade the lowest I prefer to trade on is the H4. So I'm taking a look at this weekly range because that's the speed that I want. So I would only do that drilling down from the from the monthly to the weekly, daily, and H4. These four right here. So the monthly, you can see that's exactly what I did. I took the lows and matched those, and then I took the highs and matched those, the relevant highs. So there's about 3 touches here, and there's 2 touches here. So that was fine. And then I went to the weekly, and we see that there you still have those relevant touches, lowest point on the chart, low to low, and then high to high would probably be this one right here. But at that time it was not relevant, but now is. And these can also be used as targets, so not only support and resistance, not only polarity, but also targets, and also used as stops. So these, I think, are, as far as precision in time, it's more precise, more sensitive, and functional. So here you have, for example, that weekly support that I trend that I drew here. You can see is offering a support line, and then straight through these, what ends up happening, is the trend that is drawn from this high to this high is actually acting as a polarity, and you can see right here it acts as a support, the resistance support here. So you can see it's acting as a polarity support. So what people didn't tell me about these trend lines that I'm starting to learn now is that just by my observation is that trend lines, how they're usually used, are actually polarities. They're slanted polarities. So that's effectively how I'm going to be using them and talking about them here. Most people, when they talk about polarities, they talk about horizontal polarities as support and resistance, or preferring horizontal lines. But I don't think, and usually don't. I never hear anyone, or usually don't hear people talk about trend lines as polarities. So that's what you're gonna see here. So here there was a trend, low to low, 3 lows here, to be seen as used as support. And you can also use these spaces just like the multi-time frame regions, risk reward regions, to see where where prices, what pockets price is using as a risk, and where is it going towards reward, and what line you want to target as a reward. Also, even more precision than that is like I said, the fact that these lines are used as polarity. So when you've made these, when you zoomed in and you've made these touches, these trend connections, here is a trend connection here, these preferred trend connections that you want to draw. You can draw as many as you want. What you can start seeing is that, and what I started seeing is that every time you see a retracement, you could draw one of these trend lines, and then you can see if the trend line is being used as first as a support and then turns into a resistance. You can see here, like this retracement used the polarity line that as a resistance. So is the price action after each retracement using the polarity trend as a support or resistance. So here used it as a resistance. Then we've got the next one. Obviously, if it used it as a resistance at this point, then it's already finished this retracement in the price action. So we can draw a trend point from its low to this low, from that to that low. So we've made a new trend line, and then see how the price action treats that. And you can see that it treated it made a new retracement and it treated it as a resistance. So again, what do we have next? You can just keep repeating that process and see if it's using it as a support or resistance. So here again, here's a retracement. It used it as a support and then broke through it and used it as a resistance. And then so we've got the next retracement, and these actually were drawn earlier as part of this price action. So just I didn't draw anything new here, but you can see that the price action is going through and using each of those lines as a support resistance, as a polarity support resistance. So currently we have it under this trend line here, and this line comes from these two lows here, this series of lows. So if the price actually keeps using this uses this as a polarity, etc., we can confirm that it's still in its downtrend. So this would be this looks like a current target, a potential target, and that is and you can see that this line comes from a downward trend. Let's get here. Yeah, this line comes from this this old trend line. Is it this one or this one? No, it's this one. Okay, yeah. So it comes from these two highs, right? But the other point is that that line that it's targeting that came from those two highs was then used as a polarity support, and then was part of that momentum move right there. So now we're coming back to it and seeing how it's possibly used as a target. Is it going to be a support or resistance, etc.? So this is the strategy that I'm going to keep talking about. Additionally, I want to note that there are other things that you can keep your eye on, such as just using, this is more like a trend following system, I would say. All of these things are more like trend following systems, but another example is a totally different strategy is using like a 50 MA, and then if the price action is on whatever side of the MA, use the MACD to confirm it. I have an Indian friend that taught me this. For example, using this on trading view, using the MACD to confirm the price action, confirm the direction on whatever side of the trend it's on. So obviously the MACD says sell, but we're not going to sell because it's above the 50 MA. So if you're above this 50 MA, then you see then only buy when it's above the 50 MA, and buying on the MACD is green on the MACD, etc., and so on. So according to that, I would not sell yet. According to this, I would not sell yet. But according to this, I would have been selling already as soon as I found these polarities. The retracements were acting on polarities around here. I would have exited and been selling already, and already have taken a lot of this. So either way, this is a slow way to trade the trend. We're still waiting to sell on this, get a confirmation, and so it depends on what tools you're using too. So this is more like total price action, and so I prefer this. Like I've said, I prefer this to even these average lines currently. This gives a really good picture at the start which direction it's possibly heading, and then you get something for the. But because it's dealing with averages, you might miss out on some exact entry if you need that precision. But for this, you definitely get the precision. You get short, and preliminary results. So I'll definitely be watching this more, and I think this will be a very good thing to progress.